Yeah, what's going on, everybody? It is, what is it? December 21st, Wednesday. Had a pretty good day today. All right. I mean, I kind of told you all this was going to happen. I mean, I don't know how I can be any more accurate than this, and that's not me trying to pat myself on the back. What I'm trying to impress to you guys is, you keep track of these flows, and these are very predictable because this all comes off of the normal course of government spending and taxation. I mean, we know how these things are going to play out. We know 4 times a year there's going to be a quarterly corporate tax strain. We know April 15th is a tax strain. We know 4 times a year you're going to have quarterly interest payments. We know the level of spending. We know we can track the deficit, so we know how much water is going into the swimming pool. I'm trying to make this as easy as possible. I'm trying to keep you guys focused on the big macro picture, and I've reduced that really down to a metaphor, which is the swimming pool metaphor. I mean, I don't see how I could make it any more simple than that. If you keep that in your mind, and if you have a picture of what that looks like, is that water going up? Is that water level going up? Is that water level going down? Then you really have the core picture. And I'm telling you this right now, and I don't care what your background is, but you're gonna beat out 95 to 98% of all economists out there, because we know, and I've shown you how they are all fixated on a single variable type of analysis, which is just monetary policy, of which they really don't understand it. I mean, they understand it kind of like in one frame, but they don't understand it, universally, kind of like the whole aspect of what rate adjustments really entail. So you're going to beat the economists, and that should make your life very simple. I mean, it's not even really about stock picking. It's about if you have a handle on basic economic conditions, and if conditions are positive, the market's going to go up. You could basically play in one ETF, like an SPY, like an S&P ETF. You don't even need to pick individual stocks. Now, I pick individual stocks. I mean, it's also kind of like it's an intellectual challenge. I like looking at different companies. I don't profess to be a financial analyst. I don't look at necessarily their balance sheets and all that. I look at their valuation pretty much based on a price earnings. And then I keep in mind the macro picture. There's going to be, regardless of what the big picture is, there's going to be some sectors that are always going to be doing better than other sectors. And then we'll see from time to time rotation from a sector that's been doing well into one that hasn't been doing that well. And that all is a function of how the economy evolves over a period of time, what kind of policy is in place, all that stuff. It's not hard. You got to keep it simple. You got to keep a clear head. And I think one thing that has stood out really obviously over the last the course of this year, especially since March, when the Fed started raising interest rates, is a complete and hysterical fixation on rates, and a total lack of understanding about the fiscal picture, which I've been showing you has, that's the first derivative, that's the pump, that's the core of the analysis. Somebody asked me a question saying, well, how about all these layoffs from tech companies that we're hearing about? Isn't that going to raise the prospect of recession? Look, you know, that to get into that sort of thing for me personally, that just deviates from my core analysis. And I'll give you an example. When we were in the pandemic, like in the deep pandemic where we had the shutdowns, and that was, you know, in 2020, and unemployment shot through the roof. But there was a massive fiscal response which put money into people's hands. So I remember reading commentary from people who I consider to be like astute traders, okay? And they're like, this is going to go down so bad. It's, you know, and then when the market started to go up, I was watching them and they were completely kind of flustered and frustrated. They couldn't understand it. They were like, you know, look at the unemployment rate. Look at, you know, the economy's in contraction by, what was it, like 20-something percent, 30%. And they were looking at all these things, and I kept saying, you know, to myself anyway, and I probably was making videos about this at the time, you know, there's this tsunami of income being transferred from the government through the stimulus into people's pockets. It kept demand, like we snapped way back after as soon as the stimulus hit, like the first reaction was a big contraction. All right. I mean, it took a little time, and it didn't take much time, but it took, you know, like about a month for policy to get going, and then for that stimulus to start to flow into the economy. But a lot of people, again, who I consider very savvy, I don't know, you know, they were savvy as traders. They were completely frustrated by it. They were completely blindsided by it. The fact that the market kept going up, and they were selling and they were selling and they were selling the entire time. So it's a long-winded answer to your question. I don't know. Look, I'm looking at a couple of things, okay? I'm looking at the monthly job reports. I mean, if the tech sector, for example, if the tech sector now is experiencing layoffs, if these big tech companies are laying people off, other sectors of the economy, like right now, the service sector, one of the things, and I don't know if I mentioned this yesterday, I may have in the video, and I'll put up a little chart over here, is that average daily employment taxes, right? That's taxes that come out of people's paychecks, all right? Employment and withholding taxes, that's stuff like Social Security, FICA, those things. It's been shooting way up. Now, what does that tell me? It tells me that wages are going up. And it just happened. If you look at this chart, again, very closely, it shows that spike just recently. And that's probably a function of seasonal workers. Okay, it's this time of year. I mean, it's the holidays. Companies hire seasonal workers, so that, you know, you got to take everything into account. So if you're gonna analyze, let's say, on one aspect of the economic environment, which is jobs, and then on that one aspect of the economic environment, jobs, you're then narrowing it down into one sector, I think what you're doing is you're limiting yourself. You're missing out on the big picture, okay? When you say, hey, look what's happening in tech. Tech is big. I'm not saying it's not big, but I mean, this is a huge economy. I mean, the U.S. economy is 22, 23 trillion. It's the biggest economy in the world. So you say, yeah, some big tech companies are laying people off. I think you set yourself up for kind of disappointment in the analysis. I'm not saying you're going to be wrong, but I'm saying you exclude a vast amount of the rest of the picture. So again, for me personally, and I'm not telling anybody that you have to do what I do, but I like to keep it simple. And by keeping it simple, that means I'm looking at the swimming pool. For me, that's really all I look at is the swimming pool analogy. Like, is it filling up or is it going down? And I could tell you in advance, when it's going to go down. I told you, right? It's going to go down again in March 15th of 2023. And then in March, April, those are bad months. And then into May, okay, it's going to go down. It just went down in December, okay? It's going to go up now from now into mid-February. February 15th, we're going to get a quarterly interest payment. Every time we get those quarterly interest payments, that's a big, 45, 50 billion additional boost in that particular month on top of the regular spending. And in general, when you just strip out those quarterly events, let's say, let's set aside the tax drains, 4 or 5 times a year, and the quarterly interest payments 4 times a year. Is the government running a deficit? Is the deficit increasing? Okay, because like this year, we knew the deficit dropped a lot. It was a historical contraction in the deficit. I was talking about this. It was like 1.9 trillion. That was a record drain of the swimming pool. I mean, you're talking about, that was a record drain of the swimming pool. And I said that was going to happen. And then I said, but then it would reach a level and it would start filling back up again. And that's, that happened too. So we know what the picture looks like. Now, when you throw in, there's going to be all these other extraneous things happening. Like we have, monetary policy going on. We have geopolitical things going on. These things all generate headlines. We have an oil cartel, OPEC, going on. Okay, so all these things generate headlines, and headlines trigger reactions. So you could be sucked into these reactions and behave like everybody else when they see a headline. Maybe you're very, very adept and quick and you play the headlines and you get in and you get out. That's fine if that's your game. That's not my game. Look, I spent years and years and years as a floor trader on 4 different exchanges. You want to talk about short-term trading to me? I mean, I was literally doing stuff in seconds, buying and selling all day long. Thousands of trades a day, just buying and selling. I was in the pits in Chicago, in New York. So, I've been there, done that. I'm not telling you don't do it. I'm just saying you're never going to have an advantage like I had standing in the pit and watching the order flow and being able to execute instantaneously like that. If you think today's setup with like electronic trading is high tech, which it is, it still doesn't compare. Believe me, it doesn't compare to the pits. When you're standing in that pit and you see the volume and you see some broker from Goldman Sachs or JP Morgan running in, and this guy, you see his face, you could read him. It's like a poker game, and like he's got something big, and you can front run that. So you can't. I mean, I've been there, I've done that. All right? But if you want to play that game, I don't. Like a lot of times I say to you guys, fade the headline traders. How many times have we seen it? Like, I pointed out almost every opportunity I can. When something happens, when there's an event or somebody says something or a Fed person says something and there's a headline and everybody sells, right? Or everybody buys based on this. And then, 2 days later, the whole thing is erased. Maybe the next day, the whole thing is erased. And these people, we went through this just recently. What was it, last month, when I was saying, the monetarists, I did a bunch of videos just showing how these monetarists were getting chopped up like crazy. They were selling, they were buying, they were selling, they were buying. Every time it was wrong because, it's like this herd of sheep that just like all doing the same thing based on a headline. And then 15 minutes later or the next day, the headline changes and now they're going the other way. if you want to do that, it's fine. But I like to keep it simple. I like to keep the big picture in mind. So when that happens, and I'm not saying, sometimes it's hard. I mean, it's stressful. I'm not going to say it's not. I'm not going to say I sit here all day long with this position and I'm really comfortable and everything is wonderful and it's all butterflies and rainbows. I mean, sometimes it gets pretty stressful. I'm trying to make money too. All right? I try to make money too. I mean, I'm trading my own money. I'm managing my own funds. But I try to keep that big picture in my head. And, when you really step back, that's why people say, oh, you're always bullish. Well, how, again, I've tried to explain this so many times. How can I not be? I mean, when the government is spending, 6-7 trillion, don't forget, like before the pandemic, and I could go back even further, but before the pandemic, government was doing like about 4 trillion annually. And that was even enough. That was enough to keep the economy in an expansion. It was 4 trillion plus annually of spending, let's say closing in on 5 trillion. That was enough to keep the economy in an expansion. And I could go back even before that when Bush was president, before the financial crash in 2007, 2009. The spending was like 2.78 trillion. Now we're doing 7 trillion. And, when Bush was president, a 250 billion deficit was considered like a big deal. Right? Now we're running $1 trillion deficits. So that's like, if you think about that pipe with the water flowing into the swimming pool, the pipe back in the Bush days, it was like as thin as a little straw. Now it's like this huge, pipe with water flowing out into the pool at a volume. And even though, we've come down from the pandemic volume and rate of flow, we've definitely come down. But compared to even when Trump was there, again, it was like, just around 5 trillion. I mean, we're way above that. We're way above that. So like, look, if the financial balances of the economy, of the non-government, just continue to fill up, we live in a capitalist system, which everybody says is fantastic and it's the greatest thing ever invented. This is what I don't understand. If you believe in capitalism, which I think most people do, then it's hard for me to listen to people when they complain about spending, government spending, because the spending induces the capitalist system to provide the goods and services to meet that spending demand. That's the whole nature of capitalism. It's the profit motive. So it just seems to me completely like contradictory or hypocritical to say, hey, I'm a capitalist, but we should stop that spending. The spending has to come from somewhere. If you want to stop the spending from the U.S. government, then somebody else has to fill that void. It's got to be foreigners. It's got to be domestic business, and there's only so far they can go. Don't forget, they're limited. They don't create money. They create things. I've said this before. The government is a maker of money and a taker of things. The private sector is a maker of things and a taker of money. Like right now, we have this omnibus spending bill, 1.7 trillion, and there's massive like anti sentiment against getting that done. And I really don't understand. Like even Elon Musk came out and said, I could see the government spending just enough to keep things going, but this is too much. First of all, his businesses benefit enormously. That's SpaceX. It's basically like all completely. So like he's saying like, hey, when he's saying just spend enough, I assume he means just spend enough to keep my SpaceX company going good. All right? The total hypocrisy. And then there's regular people, and I understand they don't really understand it, and they think it's like it's their tax money. And I get it, because, you know, April 15th, we got to pay our taxes, or you get your payroll check every week or every month, and the taxes are subtracted from that. So it feels like that's what's happening. But in reality, that's not really what's happening, whether you choose to believe that or not. I mean, the money has to be put there. I said this. The money has to be put there before it can be taken out in taxes. It has to be spent into the economy first, so everyone has the dollars for the government to collect in tax. So, yeah, getting back to the big picture right now, and I tell you this, what is something like, if you're going to ask me, is there anything that would make you change your mind, or yeah, like, look, I've been saying it, the debt ceiling. If nothing is done on that, and the government has to then shift into kind of austerity mode, then we're done, and we're going into recession, okay? If for some reason the spending slows down, and really that's the only, for me, that's the only development that I could see possibly which would cause a slowdown, because a lot of these things they're automatic. You know, I said, like the big four, they're basically all automatic. I mean, Congress doesn't have to appropriate for them. It's Social Security, Medicare, Medicaid, and defense, which defense, again, it's discretionary, but, you know, they treat it like, they treat it even better than an automatic appropriation, because, look, they just did a big defense bill, and Congress added an extra $48 billion onto it above what Biden was asking for. So, I mean, I don't see, you know, is that swimming pool is it gonna get drained out? Is the level gonna kind of sink down? Are we gonna have, I think the deficit this year is gonna be larger than the one last year. All right? So, that's the update. I mean, that's the update. You know, keep it simple. I don't know what else to tell you. So that's it for today. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Remember, I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and I apply them to investing in the financial markets. See you tomorrow. Bye.